Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories this Tuesday afternoon. The Nifty and the Midcaps trade flat. IT Pharma lags. Energy and FMCG gains.
Midcap is under pressure today after the company in a conference call last evening says that its acquisition of 15.7% stake in rival auto parts maker Precall was purely a financial investment and it will be a minority shareholders in the company with no special rights.
Marico gains on Citi's buy call. The brokerage gives the volume growth acceleration in core brands a thumbs up and expects a healthy uptick across verticals starting from fourth quarter.
Lumax Auto's tech surges post-acquisition of majority stake in IAC Group's India business. The management tells CNBC-TV18 the acquisition of this particular company allows them to move up the value chain.
BEML gains on its pack with Delhi Metro Rail Corp for Bahrain Metro. The industrial equipment maker will be in charge of manufacturing and supply metro rolling stock.
Siemens India hits a 52-week high intraday on bullish brokerage commentary. UBS initiates a buy on the stock, sees potential for double-digit surprise in order inflows and a strong growth cycle ahead. All right, those are the headlines that we are tracking for you. Absolutely flat for the markets right now. While Nifty is in the green, up around 10 points, we have flattish moves coming in for the mid-cap index. That's flat with some negative bias. So there has been a tad bit of a recovery from the lows. We have seen a sharp fall from the highs and then some recovery which is underway. We'll have to see whether that sustains or not. The bank Nifty is down 50 points as we speak. And we really have a lot of sectoral moves or stock-specific moves that we can talk about. CPSC index, again, making highs of the day, so that index is up 0.6%, and Nifty Energy is the one which is also doing well. So Reema has been quite range bound. We have come off from the highs, but maybe we will see some action in the last 1 hour of trade.
Let's see. We'll toss it over to Shrikant Chauhan of Kotak Securities to find out if there are any trades that he would recommend in this quiet day so far. Shrikant, it all boils down to individual stocks. What would your recommendations be?
Yeah, good afternoon, Reema. I think, the markets are very clearly following to the range. And after hitting the levels of 18,150, now again, it is very close to the lower boundary of the entire range, which is around 17,700, 750. So till the markets are not closing below the levels of 17,700, we are going to see stock-specific sort of activity. And I think today, if we go through with the energy basket, then from that, we like Tata Power, which is currently trading at 208, 209. Since September 2022, the stock is under some selling pressure, and now it is very close to that particular trend line. And on the dismissal of that, we can expect the stock to move towards either 220, 225. So it's a buy at current levels around 208, 209 with a stop loss around 200. The other stock which we like is Phillips Carbon, PCBL, which is currently trading at some 120, 122. It was into corrective pattern and it was very close to the completing the corrective pattern, and after that it has formed falling wedge. So it is clearly indicating us that after completing the correction, the stock is going to move towards 135, 140. So at current levels, it's a very strong bet, strong candidate to buy and hold with a stop loss at 110. We can expect 140 on the higher side.
Okay, all right, Shrikant, thank you so much for joining us. With that, we'll slip into a break. On the other side, Rahul Mittal, who's the chairman and MD at RITES, will be with us to discuss their recent order wins. Stay tuned for that.
Welcome back. The company which is on our radar right now is RITES. In the last fortnight, the company has won a slew of orders. The latest one was on 17th of February when the company won EPC orders worth 76 crore rupees from North Central Railway. Prior to that, on 11th of February, the company won a 65 crore order from the Ministry of Railways again for Manesar. Before that, 11th of February, it was a Rajasthan order, 148 crore. And at the beginning of the month, they had formed a joint venture in Israel. The revenue momentum of the company up until now has been a bit muted. In fact, in Q3, the company's revenues were down 12.5%. But is the tide turning? Because we've seen a lot of order inflows. Rahul Mittal, the chairman and MD of RITES, is now joining us on the show now. Rahul, afternoon. Can you tell us, in the month of January and up until February 21st, what has been the total quantum of order inflows, and does it mark a pickup, or is this in line with what we typically see?
Good afternoon. You see, the trend of orders has been continuously coming in the last few quarters itself. Q3 itself, we got 65 orders totaling to about 1,200 crores. Our order book on 31st December was 5,500 crores, which was 10% higher than 30th September. And this trend has continued in the last month or so in January and February. We are tapping all the sectors. Our key strength is that we do consultancy across all the sectors of infra. So you see the wide range, whether it is rail infra, metros, Jal Jeevan Mission. So we are getting orders across these, and moving forward, I expect this trend to continue.
Mr. Mittal, when you say you expect the trend to continue on a quarterly basis, what kind of order win run rate are you looking at? What do you think you'll end this year in terms of order book? And when you say you are seeing demand across segments, what kind of FY24 outlook can you give us?
You see, these are very exciting times for us, considering the high capex grant in the budget. 10 lakh crores is one of the highest ever. 5.5 is highway and railways. 1.1 lakh crores is urban infra, which includes city planning, metros, smart cities. These are all our core strength. We have 9 different verticals, and as I mentioned, we have been getting orders across sectors. In fact, if you
what I wanted to
9
understand
months
is,
to 9 months,
yes, Mr. Mittal, what I wanted to understand is, since you have some visibility in terms of order flows, right? Since you're talking about this big capex wave as well, considering what you've seen in February so far, what kind of order book or order inflow do you expect by end of this year? And how much can you execute? How much of them will be executable, say, in next 6 to 8 months?
You see, the order book trend has been 2,400 crores orders in 9 months, vis-a-vis 1,600 crores in the previous 9 months. And I said this trend has been continuing in the last month or so. So I expect this trend to continue. However, we have 2 different streams of revenue. We are primarily a consultancy company, and we do turnkey to about 25%. So the order book execution varies for a turnkey contract, which is anything from 3 to 4 years, and a consultancy contract, which could be short-term consultancy as well as long-term consultancy.
Got it. What's your current order book?
Our current order book as of 31st December
We got
is
that, 5,500. Can you tell us, post these recent order wins, what would that number be?
So we declare the order book as a composite on a quarterly basis, and only certain orders which are above a certain value, we declare them to the stock exchanges when they come.
Okay.
Any L1 pipeline that you could share?
We would not like to speculate on L1s. When we get confirmed orders above a certain value, we declare them to the stock exchanges.
All right. So one of the interesting updates that you have told the exchanges is your JV in Israel. It is for Metro Management Group Limited. That's what the JV is called. Can you tell us how big of an opportunity is it? What is your share here? What kind of investment will you be making? Will it start execution this year itself? Some timelines and the amount here as well.
You see, this is a Israeli metro consultancy contract, which we have formed a tripartite JV with DMRC and Israeli firm. Right now, we have been shortlisted in the RFP. As and when the details of the orders, and in case we win it, we will inform you the details. But right now, these are early days.
So it's just a joint venture, and you've not actually won this order, is what you're saying?
Correct, very correct.
So you're awaiting finalization of this particular project win?
We have just been shortlisted in the RFP along with various other consortiums.
Got it.
Okay. So your order wins in 9-month FY23 is significantly higher than this comparable period of last year, 2,400 crore versus 1,600 crore. But your revenue execution has been lagging. In Q3 and in Q2, your revenues declined on a year-on-year basis by more than 10%. Could you explain what's happening on the turnover front?
You see, we have four broad streams of revenue, and export revenue is one of the four. And the dip in the revenue has primarily been because of the drop in export of rolling stock. And this was because of the two orders we had pre-COVID, and these were all completing their, their finality. They were reaching their finality. So that was the reason why the total top line has dipped on year if you compare year on year. However, we made up with increase in the consultancy revenue as well increase in other streams of revenue. So if you compare our consultancy revenue year on year, that has gone up by 16%. Our leasing revenue has gone up by 10%. Our turnkey revenue, which is the third stream of revenue, has gone up by 115% revenue. So even though the top line has gone down because of dip in one stream of revenue, our core EBITDA margin, which is our main focus, has gone up from 23% to 26%.
Okay. And is there any pickup or recovery in exports? And how much lower is it?
See, the export order book, which remains out of 5,500 crores, is only 100 crores as of now, which is definitely going to get completed during this quarter itself. Post-COVID, we are engaging with a number of prospective clients, both in Southeast Asian countries, African countries. And our aim is to fill up this gap of 2-3 years when we didn't get any fresh export of rolling stock orders. And I'm sure in the coming months, we should be able to convert it into a finite order. The trend has already started. We've got a small order, about 10 crores for 2 locomotives to Bangladesh. So that shows that the trend has started. I'm sure we're going to get some finite export of rolling stock orders in the coming months.
All right, Mr. Mittal, it was a pleasure speaking with you. We'll speak to you very soon again when there are more developments as far as the order wins and the export markets are concerned. So that's the word coming in from RITES saying that yes, the demand has picked up and they are looking at more order wins as well. Slip into a short break. On the other side, Arvind Subramanian, who is the MD and CEO of Mahindra Lifespaces, will be with us to discuss the business outlook. Stay tuned for that. Welcome back. Well, the next company on our radar is Mahindra Lifespaces. Saw healthy growth in bookings for the third quarter and most recently in its conference call maintained guidance of 2,500 crore rupees in sales by FY25. Arvind Subramanian, who is the MD and CEO of the company, is joining us now to discuss the business outlook and demand trends as well. Mr. Subramanian, good afternoon. Always a pleasure speaking with you. Thanks a lot for joining us. Quarter 3 has been strong. In fact, in 9 months, you're tracking sales of around 1,400 crore rupees, which is already higher than FY22 sales. What do you plan to end this year with? And this 2,500 crore rupees by FY25, I think you will be able to maintain or actually get it in FY24 itself, going by the numbers. Why are you so conservative here?
It's always a pleasure speaking with you. Yes, we've had a good 9 months to start this financial year. As you rightly pointed out, we are well ahead of what we've done in the previous year, which itself was a significant growth over prior years. So we've gone from roughly 600 crores of annual sales in our residential business to 1,000 crores last year and just shy of 1,500 crores for the 9 months of this financial year. So we will end up with a very significant growth. I wouldn't like to put a firm number on it, but I do think we'll end up with a substantial growth. We are maintaining the 2,500 crores by FY25. As I've always said, this is merely a marker in our journey. It's not the destination. If we achieve that sooner, we'd be very glad and happy. But I think we are setting ourselves up very well for that journey.
But is it possible that you could achieve your 2,500 crore milestone, perhaps in the first half of FY25 or maybe even earlier towards the end of FY24, given how strong the recent run rate has been on the sales front?
Yeah, I think between FY24 and early FY25, we will be on the cusp of that run rate, as you rightly pointed out. A lot of it depends on a few land acquisitions falling in place at the right time with the launches happening. As you know, our business tends to be a bit lumpy with particularly related to new launches, which is why I'm kind of just holding my horses a little bit. Once we have visibility on that, we'd be in a better position to estimate.
Okay, so one of the things which has been new in this quarter, that is Q4, is your redevelopment project, because that is a new space for you as well. Give us more timeline in terms of execution. How big of an opportunity do you think it is? And do you think going forward you'll take up more redevelopment projects? What kind of investment do you plan to make here?
Indeed, and you might recall it was almost a year back that we announced our intent to participate in the society redevelopment space in Mumbai. And we were drawn to this space for 2 or 3 reasons. One, it's a very attractive source of land, particularly in fully built out neighborhoods. And as you know, Mumbai is, many of the suburbs are very well built out. So there's no vacant land available. And society redevelopment offers that opportunity to do good, modern, contemporary developments in these neighborhoods.
Okay.
Secondly, we believe we are uniquely positioned because of the lack of trust in this space, that a Mahindra brand adds a lot of trust to customers.
Fair enough. Can we talk a little bit about demand at the lower end, of the economic spectrum? You did indicate in your conference call that the demand for sub 40 lakh category is on the weaker side. How much weaker compared to your expectations the same time last year? Could you quantify that? And what would it constitute as a percentage of your overall portfolio?
As you know, we have 2 segments, what we call happiness, which is typically less than 50 lakhs, and our mid-market segment. We are starting to see some tightness in demand in the happiness segment, and particularly in the 30 to 40 lakh kind of ticket sizes. And I suspect this is a combination of factors. As we know, interest rates have gone up, and therefore mortgage rates have gone up. And with inflation, the affordability for these families has been constrained over the last few quarters. We are watching this closely. At this stage, it is not yet an alarm bell, but it is a watch out for us.
Okay, so do you expect this is something which will start hurting the upper end of the spectrum as well, because it has already pinched at least the lower strata? And on your net debt as well, it has increased on a quarter-on-quarter basis. You are increasing your land purchases as well. Is that something that will continue? Just want to understand your investments and capex timeline as well.
Yeah, so firstly, in terms of trends, the mid-market we are still seeing holding significantly strong. The demand is not going away anytime soon, as far as we see it. On the net debt question that you asked, we are gradually taking on a little bit of debt. As you know, our balance sheet is near zero net debt. And we do believe having a little bit of debt in the balance sheet is the right thing to do. So we will be extremely cautious. We have no intention to leverage ourselves beyond a 0.3, 0.4 kind of level. And this is primarily to fund land acquisitions and development.
Okay. The collections in the first 9 months of this fiscal year have been about 861 crores. What's the outlook on collections? And if demand is weak, should we, say that perhaps there are going to be no more price hikes from here on?
No, I don't think so. In fact, we've taken pretty significant price hikes right through the year. Even prior to this, we've had a discipline of taking our prices up by about 1.5% each quarter across our portfolio. And we've maintained this discipline in projects that have done well. We've taken prices up as much as, in double digits. So our project in Bangalore, which did very well, the new launch, Mahindra Eden, which was India's first net zero energy project. The first phase sold out within 3 months. So we brought the second phase forward, launched that in November. We took price up by almost 15%. And that has also done very well. So wherever the market is able to absorb the price hike, we are taking price up faster.
Okay. We'll leave it at that, Arvind. Thank you very much for joining in. That's Mahindra Lifespace saying that they could achieve their 25,000 sales target or milestone maybe before the end of FY25. They could be at the cusp of achieving it by the end of FY24 or early FY25. Well, out of time on Midcap Radar. Thank you for watching Mutual Fund Corner. When we return.